Oh man, so Bitcoin recovers back above $60,000. We just got a surprise job reading which has got the markets rotating with risk back on. Does this now mean that the flush out, the fears of 50 to 52k are now over? Are we now back in a bullish trend? I'm going to break down the charts and a lot more, guys. If you appreciate this type of content, then do support the channel. Trade with us over on Bybit, on Mexi, links in the description. If you actively want to trade with me and see which altcoins I'm trading in this market right now, first link in the description is going to take you to our Telegram community where you're going to find out. Look at this, guys. Bitcoin was breaking down from this big bullish continuation pattern. Now, ironically, the bullish pattern broke to the downside. That led us to go, okay, next support comes in at that 50-52 range. But now, 2 strong days, right? Yesterday up 1.5% to kind of stem the bleeding, and today following on up 4%. Now, this, of course, led on from the fact that on Wednesday, Jerome Powell came out fairly neutral or dovish even, right? He wasn't hawkish as many of the market participants were worried about. Now add on the fact that we just got in a very interesting jobs report. Jobs came in far less than expected. The market was expecting 240,000 new jobs to be created. 175 came in as the official reading. And that now makes us kind of understand that, hang on, the labor market here may not be as strong as we were thinking. We're starting to break the camel's back. Now, why is this important? Remember, I know it sounds counterintuitive, but we need negative economic data. Negative economic data makes us understand that Jerome Powell could bring back the possibility of a rate cut. If we get healthy economic data, he's not going to cut. He's going to keep rates hiked for longer. This is one of the reasons we're seeing markets rotate risk back on. Bitcoin doing well. The NASDAQ, let's take a look at the traditional market so you guys can see. Let's take a look at what the traditional market is saying, whether it's the NASDAQ, whether it's the S&P, they're all in the green here today. 1.8% on the NASDAQ, Dow Jones even up 1%. So we've naturally got a good headwind here. Dollar index being pushed to the downside as well. The question now is, are we out of the woods? Is it time to ape back in, or are some of those scary price targets still there? Well, first things first. Each data point which is going to be released right now will create a reaction in the market. When we get a jobs figure, when we get a CPI reading. Now, why is this important? Well, when we started falling in the market, back to the bear market, Bitcoin was heavily correlated to traditional finance, right? We were monitoring the data and the market was moving on that data. Over the last couple of months here to start off 2024, Bitcoin was doing its own thing. It was just like, you know what? We got the spot ETF, we got the Bitcoin halving, we are doing our own thing. Now with those things in the rearview mirror, Bitcoin now again looks to the traditional market, looks to the sentiment of risk on and risk off to decide its direction. It's important we understand that. Now, that doesn't mean Bitcoin can't go on its crazy runs. Of course, Bitcoin can, whenever it wants, do what it wants, right? It doesn't have to conform to any specific rules. It can go crazy when it wants to. But for now, the market data is moving Bitcoin. So for you traders out there, for you investors out there, look to the economic data. Of course, I always break it down and give you guys the updates here and in my Telegram community as well. So make sure you're locked in onto those channels. So yeah, we broke to the downside. Now from a technical perspective, if you guys have taken my TA course, you will know that these patterns can break to the downside, but oftentimes they then recover to then go back to the upside, right? We've covered this off before on this channel where I've gone, hang on guys, be very careful. Do not just fall for the fact that, oh look, just because it fakes out to the downside that it's just gonna keep falling. No, it can liquidate people. And what do we know there's a lot of in this market? Leverage. A lot of leverage in this market. When this started collapsing, everybody was copying each other and saying, oh, look, this is going to fall all the way down to 50, which they're right to assume, right? Big gap here for us to fall into. But guess what that brings on? It brings on a bunch of shorts. When the market is too predictable, that is where people get wrecked, right? Because it was so obvious that it was going to pull back, guess what? Now everybody piles on short positions. Now, let's go wreck those shorts. Let's go liquidate them. And that's what we're seeing right now. The shorts are getting wrecked. But does that mean we're going to turn into a bullish trend? Not necessarily. It takes far more work to turn the trend back bullish. I'm going to show you what will need to happen for that to be the scenario to play out. So for now, this is a wreckage, right? I'm making up a word. This is us wrecking the shorts. And that's what you're seeing happen right now. Shorts were piling in and now we've wrecked them. But does that now mean we're going to start doing this? Right? That's the question. And that's going to happen based on us regaining some very important levels. I'm going to kick off first with our trusted daily EMA ribbon. Where does it sit? Let's move my ugly face out of the way. We need to get back to here, guys. 60,100 is where this EMA ribbon is sitting. We need to get ourselves above that. And more importantly, this level here. Look at this level here. This level here, around the 67,000 mark, is where we got rejected. If you remember, we were in this channel. And in this channel, we moved to the upside, rejected, came to the downside. Went to the upside, rejected, went to the upside, rejected. And now at this point, we wanted to start our journey back to the upside, right? Getting back to 70K. But we got rejected at 67. So this is a very important level. If we want to regain the trend, we need to work our way to that 67 and create a very important higher high. I want to see just a higher high there. It's fine if we curve back down. It's fine if we do this. That's not an issue whatsoever. We can keep consolidating. No problem whatsoever. What we cannot do is have a lower high. We can't just do this. Then 50 and 52 are still in play. The bears are still in control. So for now, yes, great. The shorts are being liquidated, but we've got some work to do to regain the trend back in a positive direction. So first step is good. Some positive data here for the markets. We can rejoice over it. We can even see the dollar index here kind of taking a beating here over the last couple of hours to the downside. Good. We need this dollar index to move to the downside. But still, dollar index is in a bullish trend. It's still above its weekly EMA ribbon. If we switch back to Bitcoin, you will see that we're trying to hold our weekly EMA ribbon, right? And this is really important. When I said that this market was super extended, we've now had our pullback. Look at that. Over the last 5 weeks, you've seen a nice pullback, which culminated into what we've just seen this week, which is a pullback which briefly touched our EMA ribbon right there. Right there at the top of the EMA ribbon, if you see Bitcoin fell as low as 56,500. That is a touch of the EMA ribbon. Now, of course, we can have another red week and we can kind of come deeper into the EMA ribbon. But so far, we've got a pullback. So if the bulls wanted to step in now, I'm perfectly happy for it right now. I wouldn't say the market's overextended. RSI's reset. We're now officially not in the overbought territory. So now we've got the energy. Think of a marathon runner. We've now had a drink and had a little bit of a rest to go for our next run. I feel confident that if Bitcoin wants to bounce now, or even bounce a little bit later if it wants to pull back a bit more, we've got enough energy, enough fuel in the tank to go and really mount an attack at the all-time highs, at that 74,000 level, and push beyond it towards 80 and 90. That pullback was needed. And this is why it's really important that when the market is feeling like this, sometimes it doesn't stay there for long, right? If you take a look at the finger index here, 48. Sometimes when the market is nervous, that's when you need to act. This was on fearful for the last couple of days. Already it's on neutral. By tomorrow, maybe it's back in the green. When the markets are bleeding, when people are scared, when they're panicking, that's when you need to show your conviction. That's when you need to have a plan. You know what you're DCing into. You know which altcoins you wanted to pick up. You know what Bitcoin you want to pick up. Did you take action? If you didn't, it's okay. Prepare yourself for the next time. Learn your lesson. Learn your lesson that you're like, oh, this pullback's going to wreck everybody and I'm not prepared. Learn your lesson and say, I'm going to be prepared. I'm not going to fall for it next time. When everybody else is fearful, I'm going to start nibbling. I'm not going to catch a falling knife. I'm not going to, YOLO everything in, but I can nibble. I can buy a little bit. I can start building my positions because ultimately the tech hasn't changed. On all the altcoins that got decimated over the last the week or so, did the tech change on Phantom or any of your favorite projects? Did the tech change? No, it didn't, right? It was a macroeconomic-led fear leading into Jerome Powell's press conference, which created dump and risk off. So you guys should know that. You should know that this is me having an opportunity to buy some of my favorite altcoins when the tech hasn't changed. So, to summarize this video, guys, are we out of the woods? No, we got work to do. Is it a positive? Yes, we're wrecking the shorts. But don't get yourself caught back in the pullback. And this is why when this market is so volatile, do not be in leverage. Stick it to spot, stick it into your high conviction plays. Don't try to time the market. It really is that simple. I'm going to keep repeating it every day for you if I have to. Do not get fallen for this, right? If we don't get above that EMA ribbon, there's still a risk of us breaking to the downside. And if that happens, 50K is still in play, okay? So yes, the market's, rejoicing right now. Yes, it's good that the labor market data is showing a sign of softening. Yes, it's good that the unemployment rate also went up slightly. But more importantly, we need a bunch of data showing that same trend. If we can get a bunch of data showing that same trend, we can push dollar index to the downside, then Bitcoin looks ready to go for its next move up towards 80K and 90K. And I'm excited for it. If you're excited for it as well, jump into our Telegram community because I will be actively trading altcoins. I'm monitoring a bunch of altcoins right now, and as soon as I'm ready to press the button on it, I'm going to share with you exactly the setups and how I take those trades. Join me in the Telegram community. Thanks for watching, and I'll see you in the next one.